And like we saw in 2022, where we had a little a rate spike due to inflation concerns, and those companies all just went on sale. So it's possible that we're having a little bit of a redux of 2022 now, where those companies are floundering for whatever reason. And I think what's happening is investors are a little bit eager now to see some tangible results from the investments that these companies have made in this AI race. And at this point, we're talking about trillions of dollars, or over $1 trillion. Each of these Mag 7 companies has invested hundreds of billions of dollars each in the AI race. So, which is great. I think it's something that has kept people excited and engaged about what's coming next for these companies. But at this point, it's been a lot of capex and not a lot of return. So it's possible that that's going to be the narrative about why these companies are lagging a little bit this year. But the good news is, this is something that we talked about 6 months ago or so, maybe September or October of last year, as a possible theme for 2026, which is just a changing of the guard and the baton being handed from these Mag 7 companies to the other 493 companies in the S&P 500. And obviously, that's not quite literally the case, but we are seeing certain sectors that are picking up the slack. The S&P is positive this year, despite Mag 7 being down double digits. And we're seeing performance from areas that are generally boring, like we all know energy is up, consumer staples, utilities, materials. These are sectors and areas of the economy that are starting to pick up a little speed. And I think they're catching a little bit of the AI investment. So the money that is being invested in this AI build out for the largest companies in the world is being invested in some of the areas that had been lagging. So we're seeing a broadening out of the market, which generally speaking is what you want to see.